Hey guys, welcome back to the channel. Today we have a very interesting topic. We are going to talk about pawn. We do not own any shares mentioned on the slides, although we wish we did. And as usual guys, none of what we say is financial advice. Please speak to a professional. Hey guys, if you're interested in building a 6 to 7 figure portfolio using the power of stock investing, head over to the comment section or the description to sign up for our free masterclass so that we share with you exactly how we do it. Okay, so, well, to be specific, we'll be talking about pawnbroking. Pawnbroking is a very old industry. It is also an industry that is responsible for a lot of what I call foundational wealth. These are old money that, you know, they started off with very basic kind of business, and it grows, it generates a lot of cash, and one of them is pawnbroking. So what exactly is pawnbroking? Before we go into the companies that we're going to talk about, you know, they are sort of like non-institutional banks. I don't know how you want to describe it. But of course, with banks, you can loan out a lot more money. For them, the answer is no. So, but the simple one is, you know, if you go to a bank and you get a loan for a house, let's say, you know, the bank will give you a lot of money in exchange for two things. One, you give them a cash deposit. So this would be your house down payment. And the second thing would be your house itself, right? So technically, even though the house is in your name, at least for the duration of the loan, the bank actually owns quite a big chunk of it. And so that's how the bank protects themselves. So the question is, how does pawnbroking relate to this? So for pawnbroking, is slightly simpler, more complicated. Actually, it depends on how you want to look at it. But the simple one would be, you want, let's say, some quick cash, right? If you go to a bank, you have to fill in a lot of things, right? You have to declare your income, declare a lot of stuff. Then they may or may not accept you. For pawnbroking, it's very straightforward. You bring something of value. So it could be a watch, it could be a gold bar, could be gold chains, jewelry, anything that you know, can be presumably sold quite quickly. And so you go to the pawnbroker. Usually it's like this. It's like a shop, right? Like it's no bigger than a kedai runcit. So you go there, then you bring, let's say, your watch or your gold bar, and then you say, Mr. Pawnbroker, I'd like to borrow some money. Here is the collateral. So collateral is just, you know, in case you don't pay the loan, the pawnbroker can take the thing. So what the pawnbroker will do is he'll take your gold, take your watches or watch, and he'll look at it, and then he will, you know, roughly say, okay, this is the amount. And then he'll say, okay, I think this is worth 5,000. Here you go, 5,000. Take it. Pay me back within 6 months, right? Typically. And they charge an interest of what, 2% a month?
That's the maximum.
So a year you spread out is 24%, or since the tenure is only 6 months, so that's
12%.
12%, right? So that's the basics of pawnbroking business. And I actually didn't know this until Jonathan did the research. We have actually a couple of pawnbroking listed companies in Malaysia. No surprise, there's a Chinese word there. It's a very Chinese dominated business, as it is with most businesses. Papa Jack Holdings Berhad, and then a more recently listed company, Evergreen Max Cash. I don't even need to see the owners of the company. I know they're Chinese. Only a Chinese will come up with this kind of name.
It's
Max
very
Cash
interesting.
or Dragon Cash or whatever, right? So we are going to do a brief comparison. I'll read it out, right? So one is going to IPO at 30 cents. Oh no, Papa Jack already IPO'd. Max Cash is going to IPO. I believe it's really close, right? The balloting is really close, so too bad. 24 cents. 200. They IPO Papa Jack IPO'd at 200 million. Evergreen about 267. Now the PE is the opposite, which is very interesting. We'll talk about it later on. And of course, there are pawn shops, as you can see. Papa Jack has a little bit more than Max Cash, but I think you're looking at market cap per pawn shop is probably quite similar.
But
correct. I think if I read it correctly, it seems like the profit per pawn shop for Max Cash is
Yes, it's more. Right? So they actually manage their costs much better than Papa Jack. I mean, as you can tell from the numbers. But that's IPO, right? We never know in the next, once they go listed, whether the numbers will change or
exactly.
not. Yeah.
So this is the price. So Papa Jack, it is a huge surprise.
Yeah.
And why I say at the start of the video, at the disclaimer, I wish I owned one of these companies, because you look at Papa Jack, right? It's such an easy business to understand. IPO at 30 cents, now is up 2.5 times.
Yeah.
Now actually 3 times. 3.333. Yeah. It's crazy. So this is Evergreen's IPO. It's oversubscribed 53 times, maybe because they were motivated by Papa Jack. So based on this, it is most likely that on the listing day itself, which is in less than a week from this recording, you're looking at a pump, right? It's really going to go up. This is like tech company kind of oversubscription.
Right. No, this is actually just a picture to show you guys what is a pawnbroking looks like. Yeah, basically just now MJ explained already, you just take something valuable, talk to the pawnbroker and get loan.
This picture is actually more accurate than you realize, because for some reason, when I looked at this thing, and I always thought to myself, like, why in the world would I, as a Chinese person, want to pawnbroke or like to go and trade it in? I've heard of stories, but I've only heard of one.
Okay.
In my group of family and friends that has ever done it. So I thought, like, well, it's such a rare thing. But I did not know that a lot of Malays, right, really like to do this. And so this picture is quite accurate, because as you can see, it's also somewhat accurate that the person is frowning, because it's legalized along, right, in a way. And if I'm not mistaken as well, by regulations they can only charge 24%.
2% per month.
2% a month, which turns out to be
correct. That's the maximum.
So that is the law. So imagine if there wasn't.
Okay, so this is actually another interesting fact, is that I'm not sure if you've actually been to Papa Jack's outlet before, or pawn shop, but the stats basically shows that about 80% of their employees are female. And out of these 80% like females, right, like 50% or more is actually below 30 years old.
Yeah, surprise.
Yeah. I'm not sure about the EMCC, which is Evergreen Max Cash. Probably it's the same. But this is just an interesting fact for you guys to know. Okay, so this one is basically the difference between Papa Jack and EMCC. So actually, Papa Jack, they can only loan out maximum about 90% of the market value of the particular valuable goods that is being pledged.
Well, specifically, it's gold products.
Yes, so you can see Papa Jack's is 90%.
So Papa Jack is different.
Yeah, so it's 90% maximum for gold. But then they also got to say that if, let's say, the customer wants over 90%, they have to go through the board lah. So the board will have to discuss whether they allow or not. Or
I mean, for every single person that wants to...
No. If there is such case that people wants to make more than 90%. But so far the case has been always like 90% maximum. But for EMCC, they are quite different. So they actually give about 85 to 95%, almost like 100% of loan to the customers.
So they are a lot safer.
So Papa Jack is a lot more safer. EMCC is more like, I think they do their due diligence more.
Wait, why is Papa Jack safer? Because
they're only loaning 90%, not 95%, not 5% extra lah.
Oh, but then when we look here, like if you look at the luxury products for Max Cash, it's a lot lower.
Yes, correct. Sorry, for Max Cash is actually, there's a range, 85 to 95%.
So I can understand the gold product. So it's probably about the same as Papa Jack, right? Maybe a bit higher.
Correct.
But for the luxury products,
yes. So for watches, they loan up to 80%, but for EMCC, they only loan maximum 60%. And only this luxury product is, I think they account for less than 3% or 5% of their total loan. So a lot of people actually went to pledge the gold side instead of the luxury products.
Right.
I'm not sure whether this is the same for Papa Jack. No, maybe you guys can.
Given that they have the option to go to 95%, it makes sense why their profits are probably higher.
Correct.
Per pawnbroking shop.
Yes, correct. So so this is actually where they stated lah. It's less than 3% of total pawn loan.
But guys, before we move on, if you're someone looking to level up their stock investing skills and you need a lot more guidance, we do have a one-on-one program called the Mentorship Program. if you're interested, you can apply it in the comment section or the description.
Okay, so this is where they have to source their cash capital, because without cash capital, they cannot do this business. Inside their prospectus, they actually mentioned that by law, you have to have a paid up capital of 4 million per pawn shop.
Okay.
So if you don't have 4 million, then you cannot get the license from KPKT. So yeah, basically, the more cash you have, potentially the more money you can borrow out, and potentially the more money you can make from interest income. So you can see that this is how EMCC and Papa Jack kind of source their capital. Papa Jack is more towards capital injection from shareholders, very less from actually bank borrowings. But if you look at EMCC, right, they actually have bank borrowings, but also majority is actually coming from internally generated funds and so from director and related parties. So this kind of business, you need a lot of like cash, liquid cash.
Yeah.
To do this kind of business. And it's not really that, that's kind of like creates a barrier to entry to newcomers. You need a lot of cash, or you need a lot of partners to pool the cash to do this kind of business. So yeah, this is just a difference between their cash capital. And just want to briefly explain to you the revenue model. It's very simple only. They charge of an interest rate of 1.5 to 2%. I believe Papa Jack, they got charged 1.2% because they want to like make it more attractive to get more customers. And then of pawn loan amount, and then they also have an admin fee for each pawn you want to buy, right? You have to get this ticket. So this ticket is actually worth like 50 cents per item. Yeah, it's actually very cheap. And that's the maximum fees that they can charge for these two, which is the interest rate and the admin fee. And then they also did specify that the maximum amount of loan for each items that you pawn, you only can get about 10,000. That's the maximum. You cannot go over that. If you go over that, that is illegal already.
I wonder how they collect the money. Do they like, hey, give me a WhatsApp number? And then we chase.
Yeah. It could be. I'm not sure. This one I haven't really through. I mean, that one you have to... Maybe I need to ask my cousin, because my cousin also got operate a pawnbroking shop. But yeah, it could be interesting to know how they actually deal with that. And maximum loan tenure is about 6 months. Okay, so this is basically a cost. Very simple cost also. All you need is just 4 million. And that 4 million, in order to... what you need is basically, number one, you need the outlet, obviously. So they kind of like projector is about 300,000 per outlet. This is actually the same with Papa Jack and EMCC. So they also put 300,000.
I wonder why they need to spend that amount for just a shop. In theory, you could just have a storage place for all your inventory, and then you just sitting there with the table, right? And
correct.
Then the person walks in and says, I want a loan.
Yeah, I think also it has to do with like securities, the fees, operating. It could be inside, because they didn't specify how much is the operating expenses.
Maybe we need to visit one.
And then the remaining like 3.7 million, they're just going to put it as cash capital to loan out to people. And this is just a gross profit margin. It's a very high margin kind of business. It's like 70 to 75%. I mean, the cost is just renting that outlet, and then have that pawn machine, and you just hire...
The machine is to weigh stuff, is it?
Yeah, to weigh the gold, to see the purity of the gold, and then also have to buy like magnet and then some chemical stuff to actually just test whether this is a real gold or not. Yeah, it's all the very little cost only. That's why you can see margin is actually very, very high for gross margin. Okay, so this is basically the difference between how much revenue is coming from local customers and foreign customers. For EMCC, so right now it is about like 80% over is local and 10% each is like foreign. This is actually quite similar to Papa Jack as well.
More or less.
90,
okay,
yeah.
Interesting.
And yeah, so this is interesting because the ROI is actually very different, because you can see that the ROI for Papa Jack is around like 20-ish%.
Yeah.
So for the numbers in 2021 and 2022, that one is, I'm not too sure. I just get the number from the IPO proceeds and just add it to the cash capital. They didn't really report how much was used in this these two financial year end. But then for EMCC, they did announce they got a share and disclose how much capital has been sourced, and then this is the ROI so far. It is about like 18% on average. So basically, the more you loan and the higher interest rate you can pump, essentially the higher returns.
So right now, the question is for me, why is Papa Jack's investment per pawn shop so much lower? Correct?
Actually, investment per pawn shop is still the same. It's
but
like
why then? Why is the capital on the cash so much lower? Is it?
Oh yeah, because the cash is basically a lot. If you look at their source of cash, right, it's all coming from the shareholders. and everything. So the difference between these two is that this one, they have a lot of internally generated funds.
So they keep it there lah.
Yeah, they just use it as cash to loan out.
So that means they are being more conservative by putting this cash there and not being used, because obviously they could loan out this cash or they do it.
Yeah. So
so if you were to remove this internally, because this is basically just
the biggest
reserves, right? This is just sorry.
It's a cash actually inside their
retained
bank
earnings,
balance.
right? So they have not indicated what they're going to do with the cash.
It's basically for their loading out, cash capital. Yeah, because you can see this is their source of cash capital.
Yes. So, but they are not as efficient as Papa Jack, obviously.
Yeah, so far lah. I mean, if in terms of the ROI that you see over here, so far, I'm not sure, is it because Papa Jack can manage to charge a higher interest, like 2%, as opposed to EMCC. Maybe EMCC customers' majority is like 1.5%, more than 2%.
No, the reason I ask is because it might be that Max Cash wants to just have more cash on standby. So it will make the returns on capital lower when you calculate. Could be also.
Yeah, it could be also.
So suppose if Max Cash had the same levels of internally generated funds of Papa Jack, what will it look like?
Probably about actually it depends on how much they charge for interest. It's basically just interest only.
Right, because this one seems like a lot lower, right? Because you see it's like half, right?
And also because I think EMCC, they have because they got a lot of shareholders, right? We're not sure whether that shareholders want a specific return from them. So it's like they could say that, okay, I borrow you this amount of cash for 6%.
Yeah.
Then that the maximum that you can earn is 24%, right? So 24% minus 6 is like 18. Yeah. So maybe Papa Jack is more like they're all coming from the customers, and then they don't mind. They don't really have like shareholders to answer. Like they say they didn't require a very high returns. Like you don't need to give me 6%. You give me like maybe 3%, 4% is enough already.
Yes.
Yeah. Maybe that's the difference also. Yeah. Because EMCC has more cash pool from a lot of investors.
Yes.
Whereas for Papa Jack, maybe it's more from internally. Could be. Yeah. So that's the difference between these two. And then the default, it's actually very simple only. If it actually default, they will have to either go through a bidding process where they go to the public and actually they bid.
Public, okay.
Yeah. So that is actually for pawn values that's above 200 ringgit. Then they will like ask the public how much you want to buy and everything. Then they will sell it Then this one, if it's let's say an item that is less than 200 below, they will actually just buy it up. They'll just actually tick it up and then just sell it to a gold trader, a gold manufacturer. And then on top of the principal, they actually also add the interest. Yeah. The 2% interest that they didn't pay. So essentially, right, they don't really make any losses. Actually, very, very minimal losses only. Because of this, you can actually sell back to a manufacturer or trader just in case the customer didn't pay like the loans.
It makes you wonder, right? Like, why wouldn't the people who have those items, right, or watcher, why don't they sell it themselves to raise cash?
Yeah, they could also actually.
Because you get the cash without the interest.
Yeah. Maybe because they still want the valuables. Like they just temporarily need the money only, and I don't want to like sell away my jewelry, so I just loan, can get money now. Yeah, just pay cash. I mean, people need financing, man. So I don't know. People are desperate for money.
Yeah.
So that's that. Okay, so this is just to show you what is the default rate like. For Papa Jack, the default rate is around like 15%. You can see it's actually pretty high. But for EMCC, it's quite slightly low. It's around like 11% to even like less than 10%.
So it's true, they are a lot more conservative.
Yes, correct.
Seems.
And then you can see the total number of pawn transaction is also, I believe, more or less the same already in financial year 2020 to 2021. But for EMCC, their 2022 figure has actually increased quite a lot, even though they have like 22 pawn shops.
So when they say pawn transaction means I just pass you the watch, you give me the cash, one transaction.
The transaction, yes, correct.
Okay.
Yeah, correct. And then, this is just a loan size and everything. This one you can actually just have a look at yourself. Basically, I just want to show you the default rate for these two companies.
Alright guys, enjoying the video so far? If the answer is yes, remember, like, comment, subscribe. And as far as comments go, if you don't like the video, do let us know as well. We always take all sorts of feedback as long as they're constructive.
Okay, that's the business side. So now we have a look at the industry side of things. So far, the pawnbroking industry for revenue has been growing at about like 5% CAGR.
That is actually surprising.
Yeah, it is actually quite similar to the market cap of each of the companies. So you can see the industry also is like around like 5%. But if you go by states, which is specifically Selangor, Kuala Lumpur, Negeri Sembilan, and Pahang, why these 4 states is because those are the states that actually have the most pawn shops.
Right.
Yeah. I mean, you don't see a lot in Kedah, you don't see a lot in Perlis and Terengganu.
So wait, Malaysia... Oh, so the black one is Malaysia, so there's a size. So half is in 4 states only. Okay.
Yes, correct. Yeah. Majority is in the central region and it's growing quite slowly and steady. Okay, so this one is more of showing you guys how much does pawnbroking business actually constitute in terms of this NBFI. NBFI is basically non-bank financial instrument, if I'm not mistaken. Yeah, and it's actually a very small segment, only it's like 5% out of all of these 94%. Out of these NBIF assets. And those NBIF assets are actually, it could be your, I don't know what is a I cannot really think of an example right now. But then it's maybe it's like your credit card and all those stuff.
Non-bank financial Along loan shop.
Yes, correct. And it's actually a very small thing.
Your parents. Anything, right?
Yes, correct.
Oh no lah. Sorry. Not your parents obviously cannot because
institutions. Yes,
institution. Yeah, but okay.
And another thing is because majority of the items that is being pledged is mostly gold, so they have to follow the gold price. And then the management did highlight that they prefer if actually gold price was stable, because if you are stable, then you don't need to do much of changes. But let's say if gold price start to like increase, right?
Good, right? No.
So
so then the guy can loan more, lah.
Yeah, right? Yeah. So what the customers will do is instead of just like cashing out, right, they will usually refinance. Yeah, they refinance it and then they get more loan. And then potentially more interest and more business for these guys.
So basically, I mean, of course they prefer it to go up lah. Because even if they go up,
then they can loan more.
They can loan more, and then if there's a default, they will have sold. I mean,
correct. But they prefer like steady lah, like
this is what we call a hits I win, tail I don't lose much kind of business. It's crazy.
Yeah, and interesting is that there's about 789 active licensed pawnbrokers in Malaysia as of September 2022, and majority of the names over here you can see here is all owned by Chinese people lah.
No surprise.
And then the top 2 is basically just Papa Jack and EMCC.
So they say here is the revenue for that year is what, 69 million?
Yes, correct, 69 million. Ooh. Then 65. Yeah, they 2 are the largest.
And the smallest is 5
million. Yes, correct. I mean, because the share capital, share capital is like 4 million already. Minimum.
Yeah.
So you just need 300,000 to set up a place. 3.7 million is basically the start lah to how to run pawnbroking. Right? Yeah, per shop. So yeah, but the minimum over here is 5 million now. So yeah, it's actually a pretty good business.
Copy and paste business also. That's the best part.
Correct. Okay, basically, just to sum it up, everything you need. If you want to start a pawnbroking business, you need 4 million to start one. Maybe you can get your friends or family or whatsoever. And then another interesting fact is that 70% of these customer profiles are actually boomies. And which is why when they want to expand their pawn shop, right, they have to select places where community size is large, but then has a lot of Malays inside.
Yes.
So yeah, that's how they actually set up new places, new shops in their places. And then another thing is that they earn about 18% to 24% interest a year, which is very, very high. And you're looking at an ROI of 20% to 18% when you do this kind of business. So yeah, that's about it for pawnbroking.
Fantastic. Wow, I didn't realize we have one more company to cover, which is CMSB, but we'll blitz through this. So Norges Bank acquired a stake in Cahaya Mata Sarawak. For those who don't know, Norges Bank is the pension. They manage actually Norway's pension fund. That's interesting.
Yes.
And they have a 5% stake, right?
Yes, 5% stake.
The pension fund for Norway is like one of the biggest in the world, if not the biggest, I think.
Yes, correct. They manage about 6.7 trillion ringgit.
That's right. Yeah, that's massive. To give a context, I think Malaysia is about a third of that. Our EPF.
Yes,
less than a fifth of that maybe. So actually maybe even less than a fifth. So they own the largest owner of stocks in the world, right? Thanks to oil, and honestly we should be that also, but politics. So the returns are actually not bad. I think historically they grow at like 6%.
Yes, it's like EPF.
Right, it's like EPF, but they are earning in euros, so not too bad. Interesting companies here. Yeah, but what is 50 million ringgit, right, to this? It's like
it's just like sand into the sea.
Yeah, it's like they blink and okay.
Yeah.
Right. So this is how they invest 9,000 over companies. Again, I wish EPF was like that. Of course, the one that's driving the returns, equity, no surprise. Top and my view is that because of the nature of the fund, right? It's better to be equity related for liquidity reasons, or if you want to do more unlisted or more illiquid ones, you really have to analyze the cash return profile, how consistent, and whether hopefully there's growth or not. So the top 15 companies, no surprise. All these big
basically
names
every single stocks you can name off
right?
They
and
also own
these companies, with the exception of maybe a few, they're probably going to be here in the next 20-30 years, right? They're not going anywhere. This is fixed income.
Very small bonds, very small return only actually.
Small return. This is real estate, which not doing too well in recent times. RI is infrastructure. This is a new thing, right?
Renewable infrastructure, but right now also not doing that well. Okay.
So why are they going to CMSB?
Yeah, so it's interesting that they are entering CMSB at this moment, maybe because there's attractive price. But then if you look at historically, right, they actually were past owners for Inari and BJ Food also, Berjaya Food. But then they exited after like 1 year. Yeah. So I'm not sure whether this is the same case for CMSB or not. Probably it's just they enter it for fun and then they see can make quick money or not, then they'll just like sell it off.
Sorry, I just thought of this. Do you know what this Norges Bank or this pension fund really is?
No.
It would be what Malaysia's pension fund would be like if it was managed by Singapore. You get a bunch of people who are very serious about money and oil and gas. That's
because
the formula is very simple for Norway, right? They've got a bunch of oil and gas which they discovered, I think, in the 80s. So they want every Norwegian to be a millionaire, right?
Yeah.
So they will generate the oil and then they put it into this fund to invest across the globe.
Yeah.
So every Norwegian is a millionaire in US dollar terms, right?
Right.
More or less. And Scandinavia has some of the best infrastructure, some of the best schooling systems and all that, and it's all backed by this in part. So but you have to pay 50% tax.
Yeah.
So,
but I'm not sure whether this Norwegian government, do they only have this one pension fund or do have multiple?
Maybe they have multiple, but this is the big one. This is the most relevant
one. Okay, so it's something like Malaysia like EPF is the number one, and then it goes down to the
but what is interesting about Malaysia is that we have like your PNBs, your Tabung Hajis, your Amanah Saham, things like that. So it's a bit
it's a lot
wider with different objectives. Like Tabung Haji is mainly for
Sharia
Muslims for when they do their pilgrimage, things like that. So
right. Yeah, so that's about it for today's video.
Yeah, guys. So I think we've seen this many times. FIRL Pro. We recent times return. I think the returns for September will be higher, right? Because of a certain stock which you can find out. The stock is used to be like up 20%. I think today is probably
30%. I think
it's up 50-60%. I think.
Yeah, say 60%.
So anyways, if you guys want to find out, go check out this program. What we do is we write these easy to digest reports, which you can accomplish and finish it within 15 minutes, 1 cup of coffee. And it really helps you in terms of speeding up the process of understanding companies, so that as a busy individual you are just focused on making the decisions yourself. We provide the information, we provide the research, you make the decisions. So the returns are on the right. We have a couple of portfolios for you to look at as a reference point, not to copy, Just a reference point. You want to check out a sense, you want to get a sense of what these reports look like, head over to our free sample section and get a taste. That's it, guys. Thanks for staying all the way until the end, and I hope to see you in the next video. Bye-bye.